Smaulgld.
Hello and welcome to another Smaulgld live stream. It is April 8th, Monday, 2019. And tonight's topic, India proposes making gold a mandatory financial asset. We're going to get into that story a little later on in the show. We've also got an update on that Saudi Arabian story that Reuters reported on about them ditching the dollar, big game changer, end of the petrodollar story. We've got what appears to be or should be a conclusion to that story, but it probably isn't. We've got Russian gold and Chinese gold updates, and we've got some crypto stories to get to. So welcome, Smaulgld mug stackers and game changers. Let's take a look at the gold and silver prices, the crypto prices, before we get into the stories of the day. Of the last couple of days, we took a day off. I took a day off yesterday. Should not refer to myself in the plural. Okay, let's take a look at what happened with. We'll start out with the gold and silver, the equity markets. The equity markets were mixed. So the Dow Jones was down 83 points, 84 points to 26,341. The NASDAQ was up 15 points, about 0.19% to 79.53. And the S&P 500 was up just 3 points to 0.10% to 20.95. So not much movement on the equities. Dollar index still remaining strong at 97.07. Gold and silver did rise today. Gold, I think, went up about 0.5%. Let me just make sure I'm pulling up the correct chart. Well, sometimes I pull up the days before and I repeat it. Nope, I was going to do that again. Let's make sure we've got the right chart here. August 8th, up to date. Here we go. So the gold price today went up and did not get past the 1,300 mark on the close, although during the day it did reach a high of 1,303. Closed the day at 1297.83. That was good for a $6.50 move higher. Closed at 1297. Currently trading a little bit up, about to 1298. So it's a 0.5 point rise. And silver did slightly better today. Silver rose 0.89%, up 13 cents. Had it reached a high of 1528. Close around 1524, and it's right now around 1523, which means the unsustainable out-of-whack gold-silver ratio, you know, the one that's supposed to be 16-1 and 15-1 or 9-1 or 1-1, depending on which pumper channel you listen to. Well, it did go down, on its way down to 1-1. It went to 85.2-1. Now, some other gold stories we're going to get to before we do the Indian story. There was some talk today, still some rumblings, and we've been seeing them the past few weeks, or past few days, since President Trump announced his nominees to fill the board openings on the Fed. He's nominating Herman Cain, former, I think, Kansas City Fed head, and a guy named Steve Moore, also to the Federal Reserve Board. And he's been making a lot of noises lately about raising rates during the past 2 years. Trump has said it's unnecessary. He's publicly berated Chairman Powell of the Fed that we don't need to raise rates, that actually we should. And the other day he came out and he said they should actually be lowering rates. They shouldn't be doing quantitative tightening. They should be doing quantitative easing. So he's been very vocal about the direction of interest rates and the Fed's tightening policy. And Bloomberg has noted that both Stephen Moore and Herman Cain are outside the economic mainstream in that they want to peg the dollar to gold. That's not quite true with Stephen Moore. He has said in the past he may be in favor of a commodity basket pegged to the dollar, not necessarily backing the dollar, and this Herman Cain is the same way. Herman Cain actually wrote a Wall Street Journal op-ed in 2012 talking about wanting to peg the dollar to gold. So they are outside the supposed mainstream. I heard today on the radio Fed nominee Moore say that when he gets in, he says we're going to need to lower rates. there's no inflation, and with lower rates, we can get more growth. He mentioned that the Fed was helpful by keeping rates low when Obama was in office, and since Trump has got in, they've just been raising rates. And here's also a link. I'll leave it tomorrow in the show notes. Herman Cain, Wall Street Journal. This was in 2012, saying we need a dollar as good as gold. This is when he was running for president. Remember, he had this 999 plan. It was 9% tax, 9%. I don't remember what it was, but it was some kind of gimmick. But part of his plan also was he was interested in a gold standard at the time. So we'll see what influence these two have, if indeed they both get confirmed. Not sure that both of them may have a difficult path ahead of them. There has been dirt dug up on Moore about his divorce, about his payment of taxes, and there are sexual harassment claims against Herman Cain. So that neither of them may get to prove, but they probably will, given that the Republicans control the Senate. Now, other stories before we do India. People's Bank of China announced again now for the fourth straight month that they've added gold to their reserves. Now, they had stopped adding gold. They started announcing adding gold to the reserves in June of 2015 after not announcing any additions to the gold reserves since 2009. So there was a big hiatus where they either weren't reporting it or they weren't adding it. And when they finally reported it again in 2015, they added about 650 tons. And then they added gold every month until October of 2016, and then they stopped. Now, part of that was they had sold off about $1 trillion worth of foreign reserves. At one point, they had well over $4 trillion. They sold down a bit of them, down to about a little under $3 trillion. And so during that time period, they didn't add gold. Starting in December of 2018, last year, they started adding gold, and I believe they added about just shy of 10 tons in December 2018. Then in January, they opened the year with about 11.2 tons. And then in February, they added about a little under 10 tons. And they just announced that they added about 11.2 tons of gold. We're going to cover that later in the week. We'll have some charts showing the Chinese gold additions. Russia also has been adding gold at a brisk pace. They've never stopped adding. In the last 4 years, they've had record years, and we cover that monthly, and we'll pick them up again when they announce. I believe it's on the 20th of each month, and I'll put together the chart so you can see what Russia's doing. Now, there was a story. This is kind of a pumper story. This story I don't put much stock in. It's written in the Moscow Times. Russia and China may be considering gold-backed digital currency. I like the fact that at least the Moscow Times called it an opinion. There's some nonsense in there about how a gold-backed cryptocurrency is the holy grail, which it's not, but that this would drive demand down for unbacked currencies. So the idea is that if there was a gold-backed cryptocurrency, which there already are, that this would drive down demand for unbacked cryptocurrencies. I think this is just a lot of fantasizing that this guy is doing to get himself published in the Moscow Times. But the title of the story, and I'll leave a note tomorrow so you can get the link. Russia's new gold rush could shake up the international monetary system. Russia and China might be considering a gold-backed digital currency. Now, if a government issues a digital currency, that doesn't mean that it is the national currency. So I'm not quite sure what he's hinting at here. However, when we get to the Indian story, that's a bit more substantial. And we'll talk about demat accounts and demonetization of rupees and gold monetization schemes. There's actually some substance to that story. This story is just a fluff piece in the Moscow Times. Now let's move over to China. Now, we talk about China a lot and being a debt-based Ponzi scheme. Well, China has just recently announced they're going to cut their bank reserve ratios even further. Why? To help small firms. So China exists on the lending. They need to lend more money. They need to extend more credit. And they were thinking about a year ago, just before the tariffs were announced, they were going to deleverage. They were going to shift their economy into some type of service economy. they were going to try to not rely on building bridges to nowhere and skyscrapers that are not needed and infrastructure that was not needed, and they were going to expand that out to their Belt and Road and hope that other countries would fall for it. Then when the tariffs hit, they realized that a lot of the state-owned enterprises would suffer because of the decrease in business. So a lot of the state-owned banks were ordered by the People's Bank of China to extend the loans that they've made to state-owned enterprises, loan them more money, forgive their loans, swap those loans into equity, do what you got to do, but just keep the money flowing. And then they decided to come out with new infrastructure projects. They were saying local infrastructure will build parking lots, do all types of things, surveillance projects. They put cameras on every street. And now they're saying that the banks got to a point where I guess they couldn't loan any more money because they were coming up against their reserve ratio requirements. And People's Bank of China says, don't worry about that. Just keep lending the money. Okay, now let's see what we have in the, let's see. Oh, I just wanted to show you this on Trump and the Fed. Fed may bow to Trump's call for rate cuts if inflation softens. And this is, I guess, part and parcel of bringing on two new board members, Moore and Kane. With his call for lower interest rates, Trump weighed in the debate inside the Federal Reserve about what central bankers could do. He's been a vocal critic a long time. Before he was president, he was saying it was a Ponzi scheme, that it was all going to come crashing down, that it was all based on low interest rates, it was artificial. And then when the Fed started raising rates, he said, no, that was what I was saying when I wasn't president. Now that I'm president, we need lower rates, we need to move the economy higher. You'll see that in politicians. They will always want, I think Mises said, the politicians or the public will always opt for cheaper money. It's just, if you're handing out candy, that's what you want. You want the cheaper money. It's not a prudent desire, but it is. Everyone likes to get something for nothing. So if money is cheap and you can borrow cheap, that's what you want. This goes back to the silver Democrats in the 1870s, 1880s, when they wanted free silver. They figured, well, if we're mining a lot of silver, we should just be able to bring it to the mint, and they should make coins out of it for us with $1 stamped on them, even though the silver in them would only be worth 30, 40 cents. Very inflationary. So a populist mentality is always cheap money. It's the moneyed interests that generally don't like cheap money. They want to preserve their wealth. That's why they were in favor of the gold standard back in the late 19th century, and the populists were interested in a silver standard, or a free silver standard. And I guess the way they got around it for the moneyed class was they lowered interest rates, and then they did QE, and it made it possible that they got the inflationary benefit first, and that's, I guess, how they managed to get cheap money, and they made it cheap money for the wealthy. So Trump, I guess, wants to do the same thing right now, and by bringing on two new board members, I guess he expects them to put pressure on the existing board members and, of course, Chairman Jerome Powell. Let's do Saudi Arabia before we do the cryptos, because this story, there's no truth to it. We covered it on Friday. We've discussed the petrodollar many times on this channel, and the idea of the petrodollar is that the United States dollar is somehow propped up by the mere fact that Saudi Arabia prices its oil in dollars and accepts only dollars. And that was part of the petrodollar arrangements that were created after Richard Nixon ripped up the Bretton Woods agreements in August of 1971. Under that agreement, from 1944 to 1971, foreign central banks could bring their dollars that they had accumulated in trade to the United States and get the equivalent amount in gold priced at $35 an ounce. Well, for a variety of reasons, the United States didn't want to do that anymore. They were running out of gold, and they said, how about no? How about we don't do this anymore, and you can't come here and collect your gold? Well, that drove the Europeans nuts, and they were really the only major economic bloc at the time. Japan, a little bit, but Russia was part of the Soviet Union. China was a backwater economically. And the countries that mattered were the countries in Europe, and they were not happy with Nixon telling them to go pound sand when they wanted to get gold for their dollars. And the United States was concerned that the Europeans would begin to trade amongst themselves in their own local currencies, and the dollar would lose its reserve status. So Kissinger and Nixon quickly put together these arrangements, the big one being with Saudi Arabia, where they told them, look, we'll protect you, we'll sell you arms. All you got to do is sell your oil and price your oil in dollars only. And Saudi Arabia agreed with that, and that's been around for the longest time. And the idea there was, if Europeans didn't want to hold dollars and they wanted to trade amongst themselves, well, they better start holding dollars because they're going to need dollars in reserves in order to conduct business with Saudi Arabia. So they'd want to have dollar assets in reserve, dollar-denominated bonds, so they can either get the oil on credit or they can spend the dollars directly. Now, that arrangement did somewhat keep the dollar in place as the reserve currency, but there was tremendous amount of inflation during the 70s. In any event, since the early 70s, Saudi Arabia has become less relevant as an oil producer because other countries have increased their oil production, including Russia becoming part of the outside of the Iron Curtain or outside of the Soviet sphere, now exports outside of natural gas as well, outside of the Warsaw Pact countries. The United States has become a major oil producer and exporter, in fact, is the largest now. So Saudi Arabia is less important as a exporter to begin with. However, the real issue is with the petrodollar is that those arrangements were important when Nixon, for the 5-10 years after the end of the gold standard, because it did provide an incentive to hold dollars and dollar reserves. But that incentive right now, the reason countries hold hold dollars and buy treasuries has very little to do with needing to conduct business with Saudi Arabia. They need dollars in reserve because everyone else has dollars. They need dollars in reserve because most of the world's debt is issued in dollars, and you need dollars to repay that debt. They need dollars in order to trade with the United States, and not just for oil, but for everything else. But now that the United States is a major oil producer, a major exporter, and a major natural gas exporter, they need dollars to trade with the U.S. But mainly, countries hold dollars because of the stability of the dollar, because it pays an interest rate, not because Saudi Arabia prices its oil in dollars and only accepts dollars. Well, the story the other day was that Saudi Arabia, and this is a big story they pump all the time, what if Saudi Arabia decides to sell in currencies other than the dollar? Then it's game over, game changer, gold 50. And then the whole parade of stupidities comes out. Dollar collapse, end of the petrodollar, gold and silver set to skyrocket. It really doesn't matter. And they don't do it anyway. And they're not going to do it. And the reasons are very simple. The United States protects them. It's not just that. It's also the United States under Trump has reneged on the Iran deal, which Saudi Arabia loves because they're enemies with Iran. And there's no reason them for them to do that. Remember, China may be their largest customer, just behind. The United States buys a lot of oil from them as well. They really don't get anything out of switching over to a different currency. And like China, Saudi Arabia is trying to rejig its economy away from oil because they know eventually that oil is going to run out. And we saw that. They're saying from the Aramco, I don't quite know the name of it, but their national oil company is trying to list publicly, and they've looked at the documents, and they say they don't really have as much in reserves as we thought they might. So Saudi Arabia is in a transitional period, and they are investing heavily in the United States, Silicon Valley, Twitter, companies like that. They don't want to annoy the United States by changing over to meet some gold pumper fantasy, they're going to use different currencies. But even if they were to use different currencies, it would not end dollar hegemony by the mere fact that some of their oil, let's say 20% that they sell to China, would be denominated in a different currency. It would really have very little impact. As little impact, I believe, as when Russia dumped its treasuries. Russia dumped all of its treasuries, all 140 billion of them, and the dollar index rose. There really was no impact. But these are stories that are out there, and Reuters fell prey to it. And Reuters was saying just last week that they were going to ditch the dollar and they were going to start accepting payment in other currencies because the United States was thinking of passing legislation to make them subject to the U.S. antitrust rules. It's probably not going to happen. Secondly, that even if they did pass it, the article said that Saudi Arabia probably wouldn't start to price their oil and take other currencies. So it's just a big bluff story, the type of typical pumper stuff you see in the alternative financial media, except it had a Reuters thing on it. And of course, all the alternative financial media people were saying, look at this, see? Saudi Arabia to ditch the dollar, gold back yuan, game changer, the whole thing. Well, first of all, the story didn't make sense as written, even said. Slim to no chance that NOPEC is going to pass. Slim to no chance that if it does, Saudi Arabia is going to do anything. And then I'd go one step further. No big deal, even if they did. Well, this morning I see here, Al Fahil completely denies that the kingdom is threatened to drop the dollar in pricing of oil. So Chai Girl asks, boom, there you go. Can we put this to rest now? CC's me. And I said, no, the chorus is going to be, they're lying. Don't believe them. They're going to crush the dollar. And, nothing. You can never, once the narrative is in place, if there's any hint that the newsletter subscriptions are going to dry up and they don't have another narrative to pump, maybe China to crush the dollar or some other variant or deviant thereof, they're going to continue with this story. Well, that's what happens. Immediately after I respond here, we get this. Then again, one should never believe anything until it's officially denied. And that became, the pumpers hang their hats on it. There it is, case in point. That becomes the official story now, is that they've denied it, and therefore it's true. So, Saudi Arabia, end of the petrodollar. My petrodollar narrative. And there it is. Completely denies the kingdom is threatened to drop the dollar pricing of oil. And there were many stories during the day, things in writing. Financial Times, Saudi Arabia, no change to selling oils in dollars. No change to policy. And there goes your BS end of petrodollar story that Reuters was pushing last week. But that's not the end of it. The fact that Reuters stirred the pot and Saudi Arabia had to respond to it means that the story is still out there. End of the irrelevant petrodollar. And here is the language here. Saudi Energy Ministry issues a statement denying that it had threatened to drop oil pricing U.S. dollars. And as I mentioned, the underpinning for the dollar today has very little to do with countries holding dollars to buy oils from Saudi Arabia. They hold dollar reserves. They don't spend them. They get the oil on credit in most instances. They're held because they're liquid and required to fund their debts, or they're just considered prudent to have a good reserve position. And if you're going to have a reserve position, the top two assets to have are, or top three probably, are U.S. dollars, gold, and euros. And countries also need dollars to buy liquid natural gas from the United States, oil from the United States, and the U.S. is a larger producer and exporter of oil than Saudi Arabia. So the whole story is a big nothing. It's nothing anyway, but it was made up in the first place, and even if it was true, it was a nothing. And also, Saudi Arabia is going to price the oil that it sells to the U.S. in dollars. So this whole idea that somehow all of the underpinning of the dollar would be crushed. And that's what Saudi Arabia was, Reuters was saying in that first article that we covered on Friday. It would undermine the dollar. No, it wouldn't. It is total fake news. Here it is. There's the story that we covered on Friday. Reuters, Saudi Arabia aims to ditch the dollar and end the petrodollar. Yeah. And the other thing that some pumpers are saying is that Saudi Arabia's been pricing its dollar and pricing its oil and accepting other currencies for years. Well, that undercuts the whole argument. That just shows that it means nothing. If they've already done that and they've been doing that, that undermines the concept that ditching the dollar would cause a dollar collapse. First of all, they're probably not, but even if they were, it would have no real impact. But there's this fantasy out there that the BRICS are going to crush the dollar and that China and Brazil have had it. That's their number one goal. They think that the number one goal of a country is to crush the dollar. The only countries that have the dollar front and center in their minds are the ones where the United States put it there by booting them off the SWIFT system or imposing sanctions. Brazil really is not thinking, especially with tropical Trump, Bolsonaro, that his number one goal for his country is to make sure that he doesn't use the dollar in international transactions. In fact, we saw the other night, I don't have the chart handy, but Brazil has added to its treasury positions. Many countries have added to their treasury positions over the last year or two. All right, well, that ends it doesn't end the story, but it ends my coverage of it for now. But that story is not going to go away. The petrodollar is going to crash, and that'll be end of dollar hegemony. It'll be game over and game changer, and then China will crush the dollar, and then the whole hyperinflation will set in. That's the story. And it's not going to go away. It doesn't matter how much it's denied or how much it's explained that it's not that big of a deal. That story is one of the staples of the pumpers. Gold back yuan is another one. COMEX default. JP Morgan has hundreds of millions of ounces of silver. All these stories, they're all part of the canon of the pumpers. All right, let's move on now to the cryptos. We got some stories. We're going to take a look at some prices. And then we're going to take a look at this very interesting Indian story on making gold a financial asset. Not just a financial asset, but one that'll have a demat account. We'll explain what all that is. But first, quickly, let's take a look at the cryptos today. The hype is back. The hype is back in the crypto space, and so is the bashing. Let's take a look at the prices first. We're going to get into some of these bashing stories. So, cryptocurrencies now are worth $185 billion. That's a 5-month high. That is getting all the crypto pumpers excited. They're looking for another big bull market. Litecoin is up 200%. That's a pretty impressive gain just this year. It's up even more if you go in sometime into December to look at the price. But let's take a look at the Bitcoin price for the last week. You can see now we've got a week's worth of trading since the big run-up from about 4,100. And if you look at it, it's held that gain. It's gone up, and down a little bit, stabilized a bit, but it's generally heading higher. And let's see where it is at the moment. This chart was taken, this picture was taken about 25 minutes ago before we started. That has a price of 52.83. And if I go to a live chart here, I've got 52.79. So it's about the same price. So yes, it's definitely trending higher since the big spike higher. Second largest cryptocurrency by market cap is Ethereum, or Ethereum, as Seamus would say. And that's doing very well. It's continued to move higher since its initial spike and a little bit of a dive there. It is trading at 181 about 20 minutes ago on a chart. And right now it's at 181. So not much movement in the last half hour. Sometimes during the show we see prices rise from the beginning to the end or fall sometimes more than 10%. The next one, Ripple. Ripple's also managed to hold on to its gains. I think it's at 36 cents there. It's about where it is right now. Litecoin, the fourth largest. Well, I think Bcash might have passed it today, but they're both neck and neck at about $5.5 billion. Litecoin also holding on to its gains. It spiked from 60 all the way up to 97, 98 On some indexes, some exchanges, it went to 100. And on this chart, it's at 89, and that's where it is right now, a little over 89. Big gain. I mentioned Bcash or Bitcoin Cash. That one had doubled in the past 2 weeks, but in the last week, it went from 170 all the way up to about, no, it did double, 170 to 340. And right now, it's at about, looks like it was 309, and currently, Bcash is at 309. So not much movement in the last half hour. Let's see, what else do we have? I pulled up Stellar Lumens. That's a big IBM is boosting this particular coin. This one is also, it looks like it's a little over 13 cents. And that's about where it is right now. 13.2, 13.1. Yep, so that's not moved very much in the last half hour. And I know some people here follow BAT, Basic Attention Token. That one did not follow the same pathway as the other ones. That one rose the week before a lot. It looks like it's kind of trading sideways up slightly the last week. All right, now let's get into the hype stories and the bashing of. This is what happens when the price starts moving up. When the price goes higher, let's do the hypers first, the crypto pumpers. So you got Forbes here, they're pumping it up. The game is on for Bitcoin, Ethereum, Ripple, and Litecoin. Will Bitcoin ever reach 20,000 mark again? You get those kind of stories. Then you got this guy, Tom Lee. I mean, he's always bullish. He predicted 20,000 at the end of last year. He was predicting it in December. Fundstrat Global Advisors. The Bitcoin is back in a bullish trend. Well, to him, it's always in a bullish trend. But, of course, he's adding to the chorus, not just being the one on his own. Elon Musk, the other day, said his favorite coin was Dogecoin. Now he's pumping crypto. Paper money is going away. Cryptocurrency is a far better way to transfer value than pieces of paper. That's for sure. The technology behind Bitcoin is brilliant. Elon Musk pumping away there. And then we got, his name isn't Don Draper. His name is Tim Draper. Well, that settles it. Tim Draper says Bitcoin is superior to gold. Affirms Bitcoin will be 250 large by 2020. Wonderful. He's got it all down. We know that it's going to 250 now. This guy here says he's a trader. He called the decline. Now he sees a $50,000 price target. I've seen it. I'm not going to give you the names of these people, but I remember in November and December and January, many of the big price predictors of Bitcoin, it's going to 1,000 or 2,000 first. They don't know what they're talking. No one knows where the price of these things are going. There's no valid way of valuing. Some say they're not worth anything. Some say they're worth millions of dollars. And the answer is somewhere in between. But when the price starts rising, the pumpers are out in full force. And then the bashing, the Bitcoin haters come out and they get so annoyed that the price is going up and the bubbles and the tulip pictures start coming out. Here's NASDAQ. This article is in CCN, why the NASDAQ bubble suggests Bitcoin will surge 200%. Of course it will. It's in an article. All right, let's take a look at some of the bashing, which is pretty funny. Now, the people that bash Bitcoin, their favorite thing is it's a bubble, it's tulips, and it just seems to come off as smart, I think, to many not so smart people to call anything that rises a bubble. It's just psychology. Someone says it's a bubble. It's like, oh, yes, he's smart. But let's take a look at what this bubble is. If you look at Bitcoin since 2011, it bubbles all the time. That's not a classic bubble. The tulip bubble happened once, and then it was gone. Look at these bubbles here. They don't look like much. But you're talking about like going from like $2 to $100, and then from like $100 to $1,000 in the first two circles there. And then going from like a couple of thousand to 20,000. And look, it's going back up. Bubbles don't go on for, it depends on what your definition of bubble is. There's a guy who worked at Citibank. He called gold a 6,000-year-old bubble. But my point is, most people think of a traditional bubble as something that goes up, never deserved the valuation that it had, and then it crashed. They say Beanie Babies, tulips. Those make sense. There's a period of irrational exuberance for a short period of time in which you get a parabolic price spike, and then it's like, well, why did I even own that? And it's over. Well, you would have thought these two bubbles here on the left, after the 2013 bubble, that's it. Bitcoin's done. It's finally been shown that it's a bubble. Well, look at the long period of time where it did nothing during that time period. Actually, for the rest of the chart, massive amounts of innovation and money, billions, tens of billions, went into Bitcoin related projects, ecosystems, storage, all types of exchanges, Lightning Network, SegWit. So much has happened in the space, funds, and that's not what happens in a bubble. After a bubble, investment dries up and everyone goes away. You don't keep investing in the Beanie Baby infrastructure or the tulip infrastructure after a bubble. But you could see it here, that this is definitely, you can call it an evergreen bubble. We may get another bubble. I actually think there'll be another bubble, a Wall Street bubble. But this is what I call it bubble brained. And then they start saying, oh, it's all just FOMO. That's fear of missing out. But it's the same people who say this is unsustainable. Everything's unsustainable. Anything organic is unsustainable. United States, they keep saying, you don't think the United States will go on forever? Of course not. Do you think you're going to live forever? Of course not. Everything that lives dies, and everything that is alive is unsustainable, including markets. And FOMO is part of life. These people just want to sit back and smugly look at people making money or things rising and call them bubbles. I mean, FOMO, getting married before you're 30. Oh, she only got married because she wanted to get married before she was 30. Okay, so what's wrong with that? That's what you want to do. So it was driven by FOMO. You want to have kids before you're 40, whatever it is. Nothing is sustainable. Everything is a bubble. I say simply mocking outsized crypto games with pictures of tulips may make you feel smart, but it won't make you rich. And there's this mentality out there that it's not real, it's fake. I don't understand. I know a subscriber on this channel, he bought Bitcoin at one price, he sold it, went up, and he bought 2 motorcycles. I don't know if that's fake. That's not fake. And then they try to tell you no one does that. Everyone goes out and buys Bitcoin at 20,000. Now everybody ever bought it has losses. Well, that's not true either. There are people who've done that, and it is important to be able to spot market peaks and so on, but just calling everything a bubble. There's like a cottage industry in that. And also, I can understand, because I did in 2009 to 2013. I used to make arguments against Bitcoin. I still don't like it, but that's irrelevant whether I like it or whether I think it has value. It has value. It's got, whether my opinion, what I think of it doesn't add or detract from the value that it has. It's worth $92 billion. So what happens is people continue to deny the reality of it, but it's already been proven to be worthy of use and investment, and they continue to insist. No, it's not value. It doesn't have value. And I say calling things bubbles is simply a way of justifying missing out. It makes you feel better. Oh, I don't do bubbles. No, I don't do bubbles. But look, here. Define value. When they say, oh, it's fake, it doesn't have value. It's got $90 billion in value. And then they'll try to tell you, well, so did pets.com. Yeah, but this is 10 years. This isn't an 18-month period where it went up, went down, and went out of business. It's still around, and it's gone through these bubble periods before, which means it's somewhat of an evergreen bubble. It's not the same thing as something that goes up once, people come to their senses, and then it goes away. But of course, there's the pictures of the tulips, But again, the tulip bubble was a one-time event, lasted between 1636 and 1637. But you have this arrogance of ignorance insisting that you can compare Bitcoin to a 17th century tulip mania, when Bitcoin, as we mentioned, has had 4 hyperbolic increases since 2009. Bubbles burst and fade away. Bitcoin carries on and grows. That's not an endorsement of Bitcoin. It's just the reality of it. And you can have your opinion on it, and I can have my opinion on it, but that doesn't change what's happened to the price of Bitcoin and what has been happening. Okay, I think now it's time. I'm not going to play the moronic song now because this is not a moronic topic, but this is very interesting what's happening in India. Let's move on now to India. Let's start in 2015. One of the problems that India has, the government of India, with its citizens is they go bonkers for gold, always have for 5,000 years. They love gold, they give gold, they buy gold, they store gold. It's part of wedding ceremonies. It's part of the fabric of the life of Indians, especially still the Indian farmers. Many of them don't have banks. They buy gold. There's no two ways about it. Well, one of the problems the Indian government has with gold is they don't make any gold. They don't mine any gold in India. So they got to import it. And gold's expensive. And Indian people want it. And there's over 1 billion of them. And a lot of them want it. So they got to import it. And when they import gold, it screws up their balance of trade. Gold can take up between 8 to 20% of overall trade in a given year. So India in 2015 came out with this gold monetization scheme. And they figured the wealth of the nation of India, they may have 25,000 tons of gold lying around, maybe 4,000, 5,000 in temples and the rest in the hands of individuals. They want to put that money or the gold to use. So what they thought they'd do is offer to the Indian citizens this monetization scheme. Give us your gold and we'll give you a bond and you can earn interest on it. This way the gold would be brought into the system. They could probably lend it out 100 times. I don't know what the details were, exactly what India was going to do with the gold once they got it, but the idea was they were offering to the citizens and to the temples, turn in your gold to us. This is not the same as a confiscation. And they're not buying it from you. They're saying, give it to us, store it with us, and we will give you a rate of interest. Very few people did it. A few temples did it, but it was pretty much a dud. And then a year later, they tried to change the term, maybe give a little more interest. They really not managed to wrest much of the gold from the Indian people. So it's still there with the people. And you can see from this chart, and we cover this monthly, gold continues to pour into the country. These are imports. You're talking 900, 1,000 tons a year sometimes. Last year, 718. I'll give you the update through March, probably next week, on Indian gold imports. But this is a lot, and gold's expensive. And to bring this amount into the country, and then the government never sees it again, other than the tax. There's this 10% duty when the gold comes into the country. And the Indians get it, and then the government never sees it again. The wealth that is in that gold doesn't move. It stays and is held with the people. I get another chart here. I think this one shows about where... Now this chart says Indian households have about 18,000 tons. There's estimates that the whole country has about 25,000 tons. That includes the temples. But look at this. If you take all the Indian households and then you take the gold the United States has in Fort Knox, West Point, Colorado, and a few other locations, the U.S. supposedly has about 8,100 tons. Germany about 3,700 tons. Italy, France, China, they're in the 2,000 range. Indian households hold much more than all of them combined. So the idea when the people say central banks are buying gold, that is all I need to know. Central banks are not the major source of demand for gold. They don't buy that much gold. When they say Russia and China are buying gold hand over fist, that is all I need to know. They bought 10 tons in China, a huge country, People's Bank of China. They bought 10 tons. India buys 70 or 80 tons a month. And it goes to the people. Central banks are not the biggest purchaser of gold. In fact, even last year when everyone was all excited, it was the most gold central banks had bought since 1967. Yeah, they bought about 600 tons in total. Most of it, more than half of it, was Russia. They're not buying gold in massive quantities. The Indians are buying gold in massive quantities. Chinese citizens, people in China, are buying gold in massive quantities. United States, people are buying, I say citizens or people in the United States, they account for a good portion of gold jewelry demand. And same other places in the world like Turkey and Thailand, they buy a lot of gold jewelry. Far more than these central banks are buying. Because overall gold demand is about 45% for investment purposes, and only 10% of that demand comes from central banks. The rest of the demand for gold also comes from jewelry and then some industry. All right, so you can see India is huge, and this bothers the Indian government because not only does it screw up their balance of trade, but then it essentially goes into the economy for purposes, into the Indian citizens' hands and temples, and for purposes of the government, it's dead money. It doesn't go anywhere. It doesn't earn interest. It doesn't circulate in a way that they have anything to do with it. All right, so in 2015, they came up with this gold monetization scheme. Didn't work, hasn't worked. Even more shocking, I don't think the gold monetization scheme was shocking. It was just interesting that they tried to wrest the gold out of the people's hands and it didn't work. But then what they were able to wrest out of the people's hand, you see, this is the difference between gold and fiat currencies. The government, since they control the fiat currencies, they can recall the fiat currencies. This is what got me. This was December 2016. This is when I started to say to myself, I don't like the concept of cryptocurrencies. There's nothing behind them, the whole argument. But the one thing I realized was when India did that, because I always said you can always just use dollars. Why would you go out and buy Bitcoin or any cryptocurrency when you can use your credit card or you can use your debit card or you can use cash? Well, if you were in India, you couldn't. Because what India did in late 2016 is President Modi went on television and said, all those bills you have in your wallet right now, by Monday, unless you turn them into the bank, they're not worth anything. Now that is a kick in the head. That you had to turn in your cash because it wasn't going to be any good anymore. They said it's not going to be worth anything unless you either deposit what you have in a bank account, and many didn't have a bank account. They said, well, we'll open it for you. Or you turn them in and you get new notes that we're going to give you. And the whole idea they were saying was they're trying to root out fraud. And there was a limit to how much cash you can exchange, and you had to be able to explain where you got the cash. Well, that's pretty hard in many instances. I'm sure a lot of cash transactions and payments happen where people get cash and they don't get a receipt, and therefore, a lot of people probably lost a lot of money. A lot of weren't able to turn in their notes. But this shows that India could, on a national level, nationwide, call in all of their 80% of their cash, pretty much, is what it was. It was the two largest notes, the two largest rupee notes. And, of course, gold went higher when that happened because people, instead of turning their rupees in immediately and getting new rupees for them, they figured, I'll just buy gold with it. But then the gold demand went down after that for a couple of months because no one had any cash, because they didn't have enough notes to turn in for the new ones, so people had to put the money in bank accounts. I thought it was a mess. I think if they tried that in the United States, there'd be riots. It seemed to have gotten, I think the Indians thought this is good for the country. Yeah, we're going to get rid of some fraud here. So they went along with it. But it does show that a fiat currency comes from the beneficence, if you will, of the government, and they can take that away. That's their money, and they did that. Okay, so you had the gold monetization where they try to get the gold from the people, and then you had the rupee demonetization, where they took the cash from the people and told them, we're going to give you new notes or put you in a bank account, give you a digital card so you can spend your money that way. But here is the latest, and this is the idea that gold is a financial asset. Well, that's what the gold monetization scheme was. You would put your gold with the government and they'd give you a bond. So in a sense, it was a financial asset. But in India, they have this thing called a demat account. And it is a dematerialized account. And think of it as, it's mostly like stocks and IPOs and bonds. And you have them in a form that they can be traded. It's not quite blockchain, but it's the idea that you have a representational interest in your financial assets. Now, gold is not one of these assets other than in this sense if you got like a bond certificate from the government, but I don't think they're in the demat account. And what they want to do, this is the proposal, and it sounds interesting, but it also sounds like there's a hidden trick in it. So they're saying this is in the business standard, which is Indian, looks like an Indian paper here, that a group of ministers is going to meet to come up with, they're always coming up with these gold policies. And they mentioned in the article that they had the gold monetization scheme in 2015, and the idea was to bring this gold into the system. This article says they have 25,000 tons. I had 22,000. And then, this is an important number, I never knew this, which in value is about 45% of India's GDP. Now, we always talk about debt to GDP. Look at this as gold to GDP. The gold in this system in India is worth almost half of India's GDP. Now, if you think about it, from a government perspective, that is dead money. It's just sitting in people's accounts. So they want somehow to bring that gold into what they call productive use. And so they want to give it this economic status, economic asset, or a financial asset. And that's what the gold monetization aimed to do. But it wasn't widespread, and people did not turn their gold in and get these bonds. So here's the idea that they want to do. They still have the bond out there, and they try to get people to turn the money in. But now they're saying the government is proposing to regulate the gold the way they do those other financial assets like stocks and bonds in this demat account system that they have. And by doing so, they would include gold. So you would turn your gold in, and you would get some type of, in a depository, you would get some type of, indication in your demat account that you have, there's a record that you have 1 ounce of gold, 2 ounces of gold, whatever it is. And now you have an account, and you can carry that account with you. You don't have to carry the gold, and it says you have this amount of gold. You can bring it to a jeweler. You can spend it. But the real kicker here is not just that they want to financialize it, and you can sell it just like you could. So instead of having 3 bangles and a necklace and a couple of gold bars or whatever you had, and you went to sell them, you would do that face to face with other Indians, perhaps way out in the country, and the government have no idea that you did it, and that would be it. In this case, you would turn all your gold into and get it on account, and you could then transfer it online. But the key here is now this is all part of a government system, and they can see all the different flows of gold. I'm sure they can tax it at that point. People can buy it. There's commissions to be made on the transfer. There's people working on the platform, I'm sure. You can collateralize the gold that you have, get a loan. You can do that. You fill out a loan application online. So they're trying to make gold a dynamic asset by putting the gold into these demat accounts. Now, sounds okay. If you want the convenience, one of the knocks on gold is it used to be a premier form of currency because it was divisible, it was durable, it was acceptable. You know, the whole what is money, what is currency. The problem with gold in the past 20, 30, 40 years as a medium of exchange is it's not the ideal currency because it has to be carried around. You can't buy something 50 miles away with gold unless you bring it there. So gold and silver have lost their status. All coins, all paper have lost out to digital transfers of currency. This has nothing to do with cryptocurrencies, but we're talking about just how we transact. The dollar is digital, the euro is digital. They're digital in the sense that you can transact by card, by debit card, credit card, wire transfer, and it's easier than carrying cash or coins around. And same with gold. So the idea here is, well, that sounds good. Now the gold, this is what the article that we mentioned at the top of the show, the Russian article, or the article about Russian gold, is that if you put a gold, make a digital gold currency, now you turbocharge gold. You can now spend it. It still retains all its properties, and that's a good thing, as Bernie Sanders would say. But here's the interesting point tucked into the article, that they're saying that at some point they might make this mandatory. Now that would be not necessarily a confiscation of your gold, but what it would do is you basically, everybody has to declare their gold. You have to take your gold. They're not going to take it from you. They're not going to give you anything for it, but you're going to give them the gold. They're going to put it in a dematerialized account. They're going to give you an account. You now have it, and it says you have X amount of gold. But now, because it's mandatory, you don't have the gold. It's all in a trackable and traceable system. So I want to get your thoughts on this. I don't know. I mean, this is an article. It says this is what they plan to do here. I'm not sure if it will happen. They do have this demat system in India. But it says, for formalizing gold trade and investment or making gold as an asset class, there should be compulsory registration of buying and selling gold. So I'm not sure if this is a good thing or a bad thing. There's another part where it says eventually they would make it mandatory. Let me just get the right. There was something in here that says that they planned to make it mandatory. Yeah, here it is. It says the governor's proposed holding gold in a depository account through which one can offer it for use, sell it online at the spot exchange, or sell it back to where you bought it from. Then it says, eventually, it is all in one place, and government gets to keep a watch on it. Once the concept catches up, it is proposed to make it mandatory. So we'll follow the story to see what happens in India. Now you might think, well, that's outrageous. They're going to take everyone's gold and make sure that it's all trackable and traceable. Well, the only reason I don't think that's far-fetched is because they demonetized the entire nation's cash in over a weekend. So we'll see what happens. All right, let's see what you guys are saying in the comments here. All right. What do we got? All right, Ann is here. DB Stupid is here. Pablo is here. All right. Philip Quinn says they should make Smaulgld mugs mandatory. Absolutely. I agree with that. What else? So you guys have great conversations while you're half listening to me, it looks like. Well, that's all right. At least you're here. You might inadvertently pick something up. I'm still looking for comments here. Eric Schneider. I wouldn't be surprised to see gold double in price in the next 5 years. Well, it could be. Could be. Eric Schneider. Precious metals and crypto pumpers might be right. However, their timing is way off. Well, yeah, but I mean, if you're going to make a living pumping, you at least want to be right within a shorter period of time than someone telling you rather be 40 years early than 1 minute too late. I mean, we've been hearing silver set to skyrocket for 10 years, gold set to skyrocket. The only thing that the crypto pumpers have over the gold and silver pumpers are these cryptos do spike every now and then, big time. And so at least they can point to a couple of quick wins here. You can't really do that with the gold and silver very often. All right. I hear a dog out there. What else have we got? Sorry for the silence. I'm just scrolling through. I think we're going to have to change how we handle comments here because we have so many comments. And I used to be able, because when we didn't have a lot of them, I used to be able just to scroll them and pick out some interesting stuff. But there is so many interesting comments, and you guys are having so many different side conversation that is very hard. I think we're going to have to only take comments that have Smaulgld in the... I won't be able to pick out the good ones. Smaulgld in the comment itself because it shows up for me in orange and I can find it very easily. But someone here, Philip says, Pablo, I hope the zombies don't try to take my Smaulgld and mug. No, I hope they don't because mugs are real wealth, especially Smaulgld mugs. All right, I think I'm going to shut it down now. I'll give you guys... Oh. Ann says, hi, Lewis, we chat while you talk. No, that's fine. Yeah, it doesn't make it hard for me to present, but it makes it hard for me to pick out comments that might be worth commenting on. So that's why I'm looking through them, and there's just too much here. But carry on, no issues with that. Okay, so I'll give you 20 seconds in Bernie tonight if you got any particular questions or comments, and otherwise, if you don't, I'm going to sign off. So we're going to take a look now. If any of you have any questions or comments, and we're going to count from 20 down to 0. And if there are any questions, then I will start to answer them. So let's start at 20. Then we go to 19, 18, 17, 16, 15, 14, 13, 12, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. All right, everybody, you have a good night. And we'll see you on the food lines. Okay, we got one here. Smaulgld, digital gold requires counterparty trust, bullion bank, government jurisdiction, fractional reserve, rehypothecation. Absolutely. That's exactly what they want, though. You can see why the Indians did not want to turn in their gold for those bonds. For the exact reason. But if they make it mandatory that you got to put it in the DMAT, well, what are you going to do? Fiona Whale and Lewis, what would be with gold jewelry in case of confiscation? I don't understand the question. Red, Smaulgld, Bitcoin you can verify is yours, no counterparty risk. Yeah. Oh yeah, no. Oh, you're actually talking. Forget India. Just the idea that somehow you're better off with a gold crypto. I don't think you are. It doesn't. The properties of gold are the properties of gold. Just because you can put it on a blockchain, I don't think means anything. You still have gold. You can put oil on the blockchain. You can put any asset on the blockchain, and it's fine. But you're right. It still has counterparty risk, and it's just making it easier for you to trade. I don't think it doesn't add, to me, it doesn't add any value to the underlying commodity. All right. Yep, I think that's it then. All right. Have a good night, everyone.